Welcome back to the Dorian Finance Podcast. If you're new to my podcast, it's about finance, business, and much more. And today's topic is going to be the top 20 passive income strategies. I'm Dorian, and I'm thrilled to be your guide on your path to financial freedom. Let's get started right by you following my podcast. It's not what you do that makes you rich, but how you do it that makes you rich. Now, number one is dividend-paying stocks. Certain companies will pay a portion of their profits as a dividend, and it's considered a passive income stream because all you have to do is hold the stock for a certain time period, and they'll pay you a portion of their profits. Second one is rental properties. You can do Airbnb, which Airbnb versus regular rental properties has fallen under very big issues of zoning because a lot of people don't like the fact that a person is renting for a week and potentially could cause a lot more renters to disrespect the surrounding properties, surrounding area, cause more traffic, and just a little bit of headache. But that's rental property is you're renting to someone either month to month, a year lease, or Airbnb. The third, which I wish I did this when I was 18 years old because it is federally insured and because it's really simple to do, is high yield savings account. There's many different ones, but you want to look for one that has no fees and no restrictions on it, where you can basically put your paycheck into it like a normal bank account, get the interest yield on it, and then pay all your bills. And that's a interesting strategy that I wish I knew more sooner. And then fourth is peer-to-peer lending. Honestly, I don't do that because as a kid I used to do that and a lot of people didn't pay me back or forgot, and I didn't have a paper trail of it. But it's really, if they can't get a loan or credit cards, then they're a high-risk borrower. So it's kind of not a good idea to be a peer-to-peer lender unless you're doing it more commercially. But it's really, if you have money, you can increase your return on that. Fifth is dividend ETFs. ETFs are exchange traded funds, which are usually a basket of stocks that are paying a dividend, and it really say that you're, instead of buying one dividend paying stock, you're buying, let's say, 30 dividend paying stocks. So every single month you're getting some sort of income, but by it being a fund, there's potential that instead of it being equally split 30 companies, it could be really one or two of the companies are the majority of the fund, and that's where you have to look into it and make sure it's right. And then also if they have administration fees or some sort of fees included with it, that's where you have to really look into it. And that's where I personally like to just do dividend paying stocks individually because I research the heck out of the company. And if it starts doing poorly, I'll sell it and buy a different company and repeat the situation. Number 6 is real estate investment trust. A REIT is designed to basically take investors' money and then pair it with a management company to then make a return on your investment. These real estate investment trusts, to keep the taxes low, have to give the majority of the profits back to the real estate investors in a form of dividends. They're designed to target certain types of real estate markets, such as family housing. They might buy apartment buildings, they might buy hospital buildings, storage units, etc. And some of them will buy the land for, let's say, a quarter land of a busy street, which is, there's an idea that, okay, if it's a busy street, the corner lot property is supposed to be more valuable because it's easier to turn into, that type of thing. And these trusts will buy it and then lease it back to a business, some being CVS, Walgreens, etc., that will pay for that land. And that's what these trusts do. I like it because you don't have to do closing, you don't have to do any of the maintenance on the property. The management side is taken care of. You're just the investor and you're getting a dividend on your money, and the majority of the profits have to go back to the investors, so they have a high yield. But right now the real estate market is very kind of weird, so it's kind of hard to buy properties and then sell it for a return when the market's so high. So a lot of these real estate investment trusts aren't really increasing their net worth for the stockholders, and you're just getting a dividend of 4%. Some of them are higher, but then the price of the stock goes down. So right now, the high yield savings account kind of beats some because their growth rate is either flatlined or zero at this moment. Why would you want to take risk when you're getting the same yield? That's my thoughts on that. Next is royalties from books, music, or patents. Most people can't be a musician, can't be a writer, can't be a patent holder, but those are ways to make some income, is creating a book, creating music, creating a patent on certain things, and that's how you can make residual income. Let's say you write an ebook and post it on Amazon, but you have to make sure that's popular, it's good, and then market the heck out of it and become the next Harry Potter author. That takes a lot of time, not really passive, but once you set it, then it's going to have generation of money. Then it can become passive. Number 8 is affiliate marketing. Again, that is more you're setting up a business. You have to market the heck out of it, create a blog, create videos, whatever, and you're getting a commission off of the affiliate offers that you're doing. Number 9 is creating and selling digital products, such as, like we already talked about, royalties, a ebook, a course, or software that have to be valuable. So you have to do a lot of work, a lot of market research, and then be good at it to create it and then also market it. So it becomes not really passive, but this was part of the list. And ebooks, courses, software is number 9. Number 10 is having a YouTube channel monetize. If you're thinking about the Google AdSense program, I've had YouTube since 2009, been in the platform for a very long time, and I've seen the AdSense revenue from many different creators as well, and it's really not that much money. Unless you're making millions of views per video, you're not going to be making enough money to have it as a full-time job most of the time. However, using a YouTube channel and pairing it with affiliate marketing could work if you keep into the guidelines of YouTube and make it that way. It can make some good amount of money. It's a tool of marketing, in my opinion, is what YouTube can be, because you use it to market your products or your affiliate offers. So if you only get, like, let's say 1,000 views per video, and let's say just 1% or 10 people buy something, that could make it more profit than just doing YouTube AdSense, which could be 1,000 views could equal probably $1 to $4 for 1,000 views. Compared to, let's say, like I said, 10 people bought something, and let's say that your profit per item is, let's say $100, keep it round, is basically 10 times 100 or $1,000 for that one video. That makes more sense than the $4 to $1 for AdSense. Number 11 is blogging with ads or affiliate offers. With ads, again, it becomes 1,000 clicks equals $1 to $4, so you'll need millions of clicks to do it. Or affiliate offers, you can do it where some affiliate offers, if you sign up for a free trial, whoever is the affiliate link holder will get, let's say, between $5 to $100 per affiliate link click. And that could be a lot of money right there, or it could be a little bit of money. And that's where I've been pushing myself this year to creating a YouTube channel, a podcast, a blog, all of which to create revenue sources. Number 12, creating and selling stock photo images or videos. There's lots of videos of people walking on the beach, sunsets, sunrises. For example, there's some people that'll need video footage or B-roll for their videos. I use some B-roll as well, but usually I create the videos myself or the images myself. But you can literally, let's say you have a really good picture of the moon or the sun or a sunset, sunrise, water, ocean, that type of thing. That could be something that someone needs to use in a video, whether it could be a small broadcast or it could be a movie that they'll use your footage and they'll pay you for it. 13 is drop shipping, which is basically you're having the customer pay for it and then you're using a third party to fulfill the product and they'll ship it to the house. Amazon's a example of that. Alibaba's example of that. Personally, I've researched it quite a bit. I haven't done it yet, but I find that doing affiliate offers seems like more upside than drop shipping at this moment. But again, I'll try out all the businesses eventually. Creating and selling print-on-demand products. This is usually considered like t-shirts, business cards, DVDs, etc. Most of the time it's mostly t-shirts, and I've researched that. I've actually bought shirts before and was looking into it, and it's actually pretty cheap to do, but you have to buy in bulk quite a bit to get it to a good price. And say if you're selling shirts for $15, which is pretty reasonable, and you have it with shipping and stuff like that, it can eat into the profits and can be very not as high profit margins. And there's also quite a bit of demand on t-shirts, so you have to have really good designs, but then also because the market's so competitive, your designs will be copied and then your profit margins get even smaller and it's a race to the bottom, that type of thing. That's my thoughts on that. Licensing your photographs or artwork or anything basically that can be licensed, but it's really you're licensing your photographs, your artwork. That's why Elvis Presley, Marilyn Monroe, their estate makes millions of dollars because they're licensing their image, which means that a business has to pay money to use those images or the music, and there's passive income there. The downside of that is if people stop paying you or they use it without your permission, then you have to sue them and make sure that they are actually worth suing, because it costs money to hire lawyers. Number 16, creating and selling a mobile app. This can be very lucrative, and there's two different strategies. Is one, you sell it for $1 to $10 for someone to buy it, or the freemium model where you have ads on your product. And I've seen both work quite well. However, I see the freemium model to be worth more because you can get more money long term. People that are paying for an app expect to see no ads and expect that the app gets updated to stay relevant. And if someone pays for it, you're not getting paid to keep this updated app. So the freemium model is kind of more lucrative. I've seen it work either way. I've also seen it be very costly to create apps before, so be very careful on that. Number 17, investing in automatic business systems. What that is usually you're buying an existing business that is cash flowing with the hopes to increase the cash flowingness of the business without it costing you too much time to do that. Number 18 is creating and selling online courses. That's something that I've done in the past, namely with Tai Chi and Qigong, being certified doing that. And that's been very profitable, but it was more of I was in the stage of building it, not setting it and forgetting it. But that I've seen work very well for others, and it did for me while I was building it. Number 19, participating in paid online surveys or market research. A lot of time that just to me seems like spam, and that it can cost you a lot of time. So it's not really passive, but it was part of the list too. And the last one, number 20, renting out unused parking spaces or storage units. And I'll take that one step further, and you can rent out almost anything that you're not using to make income that way. What did you think of the top 20 passive income strategies? My thoughts on it. And thank you for listening to the Dorian Finance Podcast. Please follow my podcasts and follow me on social media. Links are in the description below. Thank you very much.